sides to a really great financial future. Tom and Don are talking real money.
Today's the most special of all days in the Talking Real Money calendar. It's Money Monday. Only important because it's sort of alliterative. Money and Monday sort of go together, making it feel kind of special. So, in honor of the special nature of a Money Monday here on Talking Real Money, from this date until nearly the Christmas holiday season, every Money Monday will feature one of the rules, laws, corollaries, theories, and hypotheses of the book itself. Yes, Financial Physics.
Oh, that's a disappointment. I thought it was the line uncrossed. I had annotated a bunch of stuff here and comments from other Civil War historians.
No.
Okay.
You know, it's funny. I've gotten, like a couple of dozen reviews. No, a little over a dozen reviews for the line uncrossed. And for some reason, I don't understand it. There are two unwritten. Nobody wrote a review to go with it. They just rated the book 2 stars. Two people did that. Now, if you're going to give me 2 stars, please at least tell me why. I don't understand why you don't say why. Are you mad at me or something?
I gave it 5, and it deserves every one of those darn stars.
Yeah, I know, but yours, you would do that even if it sucked, I think.
I think that may be true, but in this case, as a guy who reads a lot of history, it's a damn fine book. It really is, so worth reading.
Anyway, we're going to read a little bit
book.
From a different book. My first book. Well, no, actually, it was my second book. It was the
Ladies
second
and gentlemen,
book of Don.
from the first book of Don.
The first book of Don was
chapter.
Mutual Fundamentals.
That's true.
Which
I have that
hasn't
too, by
been
the way.
printed in eons. This is from the third printing of the third edition, the third update of Financial Physics.
Is it the third or the second? I didn't know there was a third. 2022, right?
2010, 2018, and 2022.
I guess I forgot the 18 one. Okay. Yeah.
So it's been updated 3 times. Anyway, we're going to just start at the very beginning because it's a very fine place to start, according to a song made
By the
famous
way,
by
can
Julie
you write
Andrews.
us and I'll send you a free copy? Is that okay?
Really?
That's not gonna
I'm trying to sell the damn things.
I know, but let's help people.
They're $2.99 Kindle on Amazon.
Let's do it this way. I don't know when this airs because we record
It airs.
these
It
things
airs in
sometime
July
in January.
after you are just returning from vacation as we speak.
Let's do this we'll give people a week. After it airs, you have a week.
Which
to
is
send me a
until,
note, like the 19th or 20th or something like that.
I don't know. See, I was counting my weeks. Let's see. This one is gonna. This is gonna air. Oh my gosh! Really? This is gonna air like the 14th of July. So you have until like the 21st of July.
We'll give you 1 week if you write and you just go to talkingrealmoney.com. Click on
Ask a question.
If you send me a note, I'll send you a book, but you have a week to do it. It's a very good book. So
okay, you're gonna actually send. You have okay.
Sure.
Right.
Yeah, we got books around here.
Otherwise, you can buy them cheap on Amazon, $2.99. Anyway.
Yeah, but it's a lot cooler with me sending it to you.
Oh yeah, it's so much cooler.
Wow.
So let us read from the very first chapter of Financial Physics. This
is just I can't take it. This
is Rule 1.
Ladies and gentlemen. Now,
and basically, I'm not going to read you the chapter. I'm just going to tell you what the rule is. Rule 1,
there's a guy with holding up the number 3.
The law of wealth acquisition.
Yes.
And the gist of it is, ladies and gentlemen, this is a law, by the way, of Financial Physics. There are only 3 ways to make money. And, I promised rewards over the years to people who could come up with a 4th way to make money. That something that doesn't fit under these 3. Now, the trick is finding one that doesn't fit under these 3 because everything I can come up with, every possible variation on the theme will fit under 1 or 2 or all 3 of these 3 ways to make money. All right, let me tell you the first one. Ready? First one, money-making rule number 1, or means number 1. Money-making means number 1, luck.
And so does investing fall under luck then?
Part of it. See, it can be under, you see, investing is a combination. Investing is a combination of luck and one other one.
Okay. So luck,
Okay.
you're talking about things like lucky sperm? I mean,
Yeah. Well, okay.
luck,
Yes.
right?
The lucky parentage club where you are born into wealth. That is not something you consciously did or strove to achieve. You just got lucky. Your dad is Elon Musk, and you're one of 437,000 children who get to share the $1 trillion that Elon is worth. I don't know when this airs. It could be 447,000 by the time it airs. I don't know.
What other things, when it comes to money, fall under? You could pick the right stock, right? You could have made a
right. Just accidentally picking the right stock, thinking you're brilliant.
Yeah.
Obviously, going to Vegas, winning on the slots or roulette or blackjack,
prediction markets,
lotteries, trading the market. Being a market timer,
and thinking you're really smart.
That's more of a luck thing than any of the others. So
even picking the right active stock manager.
Some managers will claim that's skill and work.
But you got to pick the right one too. So.
But the evidence says it's mostly luck. The data says it's mostly luck. Now the second one, money making means number 2.
Yes,
is stealing.
Yeah, but how many people wake up in the morning and say, "Well, I'm gonna have money, so I'll just go take it from other people"? Not very many.
Several. The prisons are full of them. What about? Okay, well, recently there was the guy who had the cattle Ponzi scheme.
Yeah, so it was very well written up where he claimed to have 80,000 head of cattle and had like 6,000.
Yeah,
okay, a few more than 8. But it was not what he said.
But this is. I don't think anybody wakes up and says, I'm going to do it. They just suddenly discover that this is an easy way to make money, at least until they get caught. But there's a lot of illegal. And you see, stealing,
we're going to get to this.
Trading fits under this.
Yeah. And what about people selling a product to somebody they know that's not the right product for that person? Is that stealing?
Partially.
Yeah.
There may be a little work involved in that they had to make the cold call and that they try to sell you something. But if they know in their heart that this product is not appropriate for you, that it is bad for you, and that they are selling it for the purpose of generating a commission for themselves, it falls under stealing. And then the third one, which is work. Number 3 is work. So you pretty much see.
So luck, stealing, or work?
Luck, stealing, or work. There's not a fourth.
And so where does investing fall then?
Work and luck.
I see. It's a combo.
So
would you say you were a luck?
If you do it right, if you build the proper portfolio and you rebalance it and you don't panic, it's work to maintain your emotional equilibrium. That is hard to do. We have to train ourselves not to react to bad markets. That's part of the work of being a successful investor. You have a plan, you build the right portfolio, you rebalance it, and you control your emotions. That is all work. Now, there is surely a modicum of luck involved in that because the economy has to cooperate with you. So we're counting on that. We're counting on something that has at least been happening for a few thousand years, and we hope it will continue to. If it doesn't, then, you're out
Your
of
luck.
Your
ran out.
Okay,
but okay, so back to yours and maybe our situation. Would you say our investing for the last 30 plus years has been luck or has it been work?
Early on, at least I'm going to use my career as an example. When I was suggesting funds and stocks to people back in the 80s and the early 90s, that was pure luck. I mean, I worked a little bit, but it was more, the weight was toward the luck side. I was just lucky that some of these funds did really well for a period of time, that some of these stocks did well for a period of time. But the more I learned, learning is also effort, it's work. So studying the data, learning about how the financial markets actually work, learning what the academics have, the work they have done, and they work can be acquired by proxy.
Touché.
Paul Merriman did a lot of the work before I ever did the work on this. And Fama and French and the like did the work before Paul did the work. So it's work by association. It's work by acquisition. It's work by proxy.
Fascinating. I mean, there's so
but
many directions.
it's always. I don't care what it is. I don't care what you think up. If you boil it down to its essence, you're going to find that it is one, two, or three of those things all combined.
And how does it break down across the world in terms of wealth? How much has been made from wealth?
I would have to say the vast majority is number three. It is work.
Yeah.
Because when you think about it, the biggest fortunes of all time were created by the accumulated effort of a person or persons building a business.
That's so funny.
That's where most money has come from in the world. But vast wealth, vast sums of money. I mean, you want to use a historical reference. Let's talk about Spain in the 1500s. Spain basically pillaged the New World to make itself, at the time, one of the wealthiest countries on the planet. So there was mass theft happening in the world. Nazi Germany stole art and gold and the output of a lot of people, natural resources.
Yeah.
So America did it in the West.
Yep.
So it really is all of them. It really is. The fact that the U.S. did so well and became such a wealthy country had something to do with hard work, had something to do with luck, and had something to do with theft. It was a little bit of all of those.
And going back to work and wealth, because you raised a point that I had highlighted here. It's fascinating. If I woke up today and I was 25 again, God, I hope I don't make the same mistakes. But
if you get to know what you know now, that would be great.
Yeah, that would be really good. But the one thing I think we can fairly unequivocally say, you raised it when it comes to work. If you are determined to be wealthy, if you say, this is a focus of mine, it's not everybody's focus, by the way, which is fine. There's nothing wrong with that. But if it is the focus, I truly believe in today's world, the one way you can do it, and you may work out, maybe you may be lucky or unlucky, would be to start your own business. That's where you can make greater wealth than just going and working for somebody else 9 to 5.
And yet that's also an area where no matter how hard you work, if luck's not with you, sometimes you're going to fail.
Or you just make a bad decision by radio stations.
Right, you do something stupid.
Yeah,
you decide antique maps are a great way to make money.
There's a surefire winner.
Idiot.
Yeah. So, I mean, because we've made mistakes over the years. Our last hit was a good one. That's all.
And the timing was great.
Yeah.
Little luck, little work.
That's a good point.
Little luck, little work.
You think about it, by the way, starting the company basically in 2010, after the market was down. The market's gone up basically since then, so that's helped as well.
There's been some luck in there.
Yeah, there's been some luck.
And it's funny. Speaking of wealthy, if you want to get wealthy, I mean, recently, just a few weeks ago, SpaceX went public.
Oh yeah,
and made Elon Musk a trillionaire on paper.
That's crazy. How many millions is that? How many millions?
Now this is what I wanted to.
That's a lot of millions.
There was an article in the Wall Street Journal a few weeks back that said we can't even fathom a trillion. We can't fathom it. And what they did is they put a chart on the page. This was on the online edition, and at one end was $1 million, and at the other end was $1 trillion, and the line started moving, and it said, "Stop the line when you think it's $1 billion." Now
$1 billion
I knew
or $1 trillion.
$1 billion. When you thought it was $1 billion on a 1 million to 1 trillion scale.
Yeah.
I stopped it about a tenth of the way along the way. And I was off dramatically. I would have had to touch it and stop it immediately. Like $1 million, boom, hit it right there. $1 million to $1 billion is nothing. And they used a great example. $1 million of pennies, if you stack them one on top of the other, flat, would stretch up about a mile. Million pennies.
Yep.
Laid flat. If you stretched 1 million pennies, you laid them flat to get to $1 billion, that's 1,000 miles. That is the distance from New York to Orlando, basically.
Yeah.
Laid sideways. If you stack them one at a time for $1 trillion.
How high?
all the way to the moon. Wait.
That's 250,000 miles.
All the way to the moon
Yeah.
and back to Earth.
500,000 miles.
And all the way back to the moon
750,000
and
miles.
back to Earth.
That's 1,000,000 miles. That's a lot. Wow.
That's how big a trillion
Ooh,
is.
It's hard to fathom. Yeah, it really is. So,
And it's hard to imagine anyone having that kind of wealth.
yeah, it's a whole lot of money. Okay, before we move on from this,
And by the way, you're never going to get there. Just don't even try.
I run into people that want to take huge risk, and I say you're not going to be the richest, and for sure never not going to be the richest man in the world now. No one's going to challenge a trillion, at least for a while. That's going to take.
No.
Okay, but when you look at this and luck, stealing, and work, what's your big takeaway as the author of Financial Physics? I mean, when you think about those, the only three ways to
You get to choose.
Get wealth.
My takeaway is you get to choose.
you can't choose luck. Though.
You can choose. People do choose luck, though, Tom.
You're saying like by picking a stock or being in a sector, say this is going to go to the
or
moon.
A lot of
literally.
people say I am going to base my future on lottery tickets.
I see.
A lot of
choice.
people do that. A lot of people say I'm going to base my future on horse racing.
Yeah.
I'm going to base my future on playing poker. Now, interesting thing about poker is 1 and 3.
Yeah, because it is work. No question.
And, in some poker games, there's a little bit of 2 thrown in.
Yeah, turns out.
So
Ask old Bill Hickok; he'll tell you.
The thought is it helps put things in perspective. Because people say, well, there are a lot of ways to make money. No. If you really boil it down to its essence, there are only 3. And that makes it a whole lot easier to pigeonhole your ideas, what the things that you think you should do, to put them in the right little hole. And it usually ends up being a combination thereof.
Okay, those are the laws, the immutable laws of wealth acquisition. Next week, Rule 2 of supply and demand.
Another basic thing, but people
Actually,
don't fully understand.
They don't really understand.
Yeah, so we're going to talk about that in detail on our next Money Monday. We have 18 of these coming.
Getting real excited.
17 more.
Okay,
All right.
that's great. Thank you.
Anyway, we also want to help you with the things that you think are important, and our question count has still. I hate to complain, but it has.
No, we're
waned
not
a little.
complaining.
It's waned a little over the summer.
Yes, it has waned. Yeah.
Probably
okay,
because
'cause we have
Tom
one-
takes too many vacations. But
People think if he can go on vacation, I can go on vacation.
I'm taking how long are you going to be on vacation in July? Or had you been on? I guess it's past.
yeah,
now.
2 weeks.
2 weeks.
Yeah.
Mine in June was 4 days. So
Yeah.
there you go. How does
Well, I
that
didn't take
compare?
any in June, so we're evening things
Okay.
out.
Good point.
Now, of course, I had
Yeah,
Lake
you
Chelan
did. You
coming up,
actually
though.
left in June. Part of
Where'd
June.
I go?
Well, you left at the 25th or 26th. Or
Oh, I see. But that's 2 weeks. Okay. But then I am going to Lake Chelan later, but I'll be available the whole time there. In the middle of the lake with a beer in my hand, but I'll be available.
Yeah, on his phone because the cell coverage is pretty darn good.
It's good. Yeah.
Anyway, so you can send those questions in at talkingrealmoney.com. Just click Ask a Question. You can type them up. Then they go to Tom, and he either gets on the phone with you sometimes, not very often lately, or he asks them on the program because we don't have a lot. Is today a 1 or a 2 question?
Today's
show?
one question.
Just a
one
question
day
show.
Yeah.
Is that it?
One dog night. Yeah.
Kind of sad. Okay, so send those in at talkingrealmoney.com. Click on Ask a Question or click on the mic button in the lower right-hand corner and speak your question. That will go to the Friday Q&A podcast. Now, without further ado, it's Tom with the question.
Yeah, from St. Petersburg,
Easy for you to
Florida.
say.
I know.
St.
How long you had that
Petersburg?
from? St. Petersburg. Which I'm still trying to get through the book on Rasputin. I'm having a really hard time. Anthony
Okay,
Beaver, one of my favorite
That was
writers,
Russia. This is America.
Oh, okay, different St. Petersburg. Okay, good. Because a lot of wacky things happen there. Hi, Tom and Don. What would you guys do in my situation? He's a Florida resident, as we just mentioned. Just turned 67, single, retired, waiting until 70 for Social Security. No pension. 1.9 in traditional IRA, okay? 400,000 in Roth, 80,000 in HSA, and 55 left in his brokerage. I didn't total that, so that's
It's 1.4.
2.5, about 2 and yeah,
2.5. I mean, 2.4,
Yeah.
2.5.
using his brokerage account and traditional IRA distributions to live on, and along with some Roth conversions up to the IRMA limit. Very good. Mm-hmm. He's renting a temporary condo in St. Pete, but he wants to buy a townhouse nearby for $275,000. Should I try to finance a good portion of this, or should I pull $275,000 out of the Roth IRA and buy it outright?
Wait, where are the accounts? We got
1.9 in traditional, 400,000
in traditional.
Yeah, 400,000 in Roth. Yeah,
and only
55 in brokerage.
Oh wow, that is because they'd come from the brokerage first for me, but because I love letting the Roth ride.
Yeah, me too.
I love letting the Roth ride.
It's a tough one because you're going to borrow money at 6.5, right? I mean,
yeah, and the fact of the matter, it really is going to depend a lot on how that is invested, what his risk tolerance is, and all those important questions. The other thing, by the way, I want to add this as an unrelated aspect of this question of the townhouse, particularly a townhouse in Florida. One, if it's a $275,000 townhouse, it's probably not beachfront. They're not at that price. That's inland somewhere. But do me a favor. Before you even consider placing an offer, do a deep dive into the HOA's financials. Make sure they have a very robust reserve fund, because townhouses and condos are often filled with terrible, disastrous surprises, because HOAs are notorious, and I speak as a president of an HOA. HOAs are notorious for not wanting to fund reserves to the levels necessary because the current owners say, well, I don't want to pay for it. I might not own this anymore. Why should I pay for it now? We'll let the new owners pay for it when they come in. Well, sir, you'll be one of the new owners.
Yeah, but just so everybody understands. So reserves are for unexpected things that come along that have to be taken care of by the group.
No, or expected things.
Okay.
Reserves are also, for example, in Florida, 15 to 25 years, time for a roof.
Yeah.
You got to put a roof on.
That happens here. Wouldn't surprise you in the Northwest,
if it's a stucco building, it's going to crack and leak. You got to repatch. You got to patch and repaint the outside of that. You know that concrete is going to crack and erode. And if you're near a beach, that salt gets inside the concrete and eats away the rebar. And that can cause massive rebuilds in the future.
I believe they had that problem somewhere in Florida where the whole thing collapsed.
So you need to make sure that the reserves are well funded for all of these things. And you need to actually, a good reserve fund actually shows you what is set aside for what projects.
Okay, but my question there would be, and I used to own part of a condo, which I absolutely 100% hated.
Yeah.
But they just issued special assessments. They said, we got a new sewer, blah, blah, blah. Now everybody writes a check for blank.
Right. But the special assessments can be debilitating.
Yeah. No, I agree.
To somebody who doesn't have a lot of money sitting around. And I think it's patently unfair to new residents, which is why, for example, my HOA, the one that I am president of, has millions of dollars in reserve funding for projects going out 20 years.
I see it right behind you there. Yeah. So,
we're well funded. We have and Florida does have stricter laws on reserve studies, but please check that out. You don't want to get hit with a massive surprise special assessment.
Okay. Let's get
now. We can go back to the money. Now we return to our regular scheduled question.
Is out of the $2.5 million, he wants 275 or finance it. I don't know if that's to be binary either, by the way.
No, it's not. I would take some money out of the brokerage for some of that.
Yeah. Here's the thing. Okay, but we're still getting ahead of ourselves.
Actually, I'd rent.
He wants to buy this. Let's assume he wants to buy it.
I don't care.
We're getting ahead of ourselves. If you wrote a plan that says, I'm going to take 275 out of my $2.5 million, does it work for me for the next 25 years? That would be the starting place.
You do need a plan.
Once you've done that, then you can decide where it comes from. That becomes a whole different topic.
Yeah.
And
Yeah.
it will work because if my guess is he didn't give us his living expenses, but Social Security is going to be $4,800 a month. He said. I mean, my guess is he's probably living on that when it gets to 70.
Yeah.
So, I mean, my take is, and here's my general rule on, and we've said this before, borrowing. If you got to borrow above 5%, it gets a little dicey.
But there again, it depends on his portfolio. If he is a comfortable, moderately aggressive investor, and his portfolio has 7 or 8% earnings potential, then with the tax hit. See, when you throw the tax hit in,
exactly, yeah,
then
and the IRMA, yep,
yeah, and IRMA, it's starting to look more attractive to go with the note if you can get a good rate on the note, and that's another trick too. Financing townhouses and condos can be tricky sometimes.
Is it hard? Yeah, I didn't know that part of it.
It's a lot harder. We have condominium complexes here in Celebration for which you cannot get a mortgage because of
the
a lot of people, a lot of vacancies, an inability to fund reserves and that kind of thing. So.
And in the great state of Washington, we've had the case where people have owned more than half of the whole condo thing, and they won't let somebody else borrow that has less than that.
Mm-hmm.
Yeah, so that happens. So yeah, I mean, this is tricky. But for me, again, if you wrote a retirement income plan, financial plan that said, put all these things in and does it work? Yeah. Then you could go back and figure out where to take the money from that's most tax efficient. As you said, Ron,
again,
that would be the hard part.
Had you consulted me on this one, I would have said, Tom, this one requires a call.
I think I did.
No, you didn't.
Okay. All right.
Because there's too many moving parts in this. Has a lot of moving parts.
It does. So
but
Mark,
the Roth is not. The Roth is the last place.
Yeah, that would be the one I'd like to leave. Yeah.
Because that tax-free growth is a huge deal. And the funny thing is earlier on he talked about Roth conversions. So if you're going to take money out of the Roth and then you're doing Roth conversions, well, you might as well take it out of the IRA and skip the Roth conversion.
Makes no
part.
sense. Yeah,
makes no sense.
Yeah, I agree.
Thanks for your question, though, and thank you all for questions that you've sent and that you will be sending. We want to thank you in advance for going to talkingrealmoney.com and clicking on Ask a Question. And if you have a situation like this that requires maybe talking about the plan a little, and you just want help with that, you're saying, I don't need to hire an advisor. Okay, that's fine. Do you want some help? We will give you that help, and we will do that for free without any obligation. And you're not even going to get a high-pressure sales pitch out of it. It's not going to be, you must become a client. No, we're not going to tell you anything until you become a client. No, we're going to tell you lots of stuff, even if you don't. So go to talkingrealmoney.com, click on Meet an Advisor. I think that covers it.
That does.
Do you have anything else?
Well done, sir. No, I love the book, and so let us know about that, too.
All right. Thanks for listening. I'm Don. That's Tom. Talking Real Money.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit talkingrealmoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.